Welcome back now to our next conversation. Last week, Moodys announced its decision to downgrade 3 non-financial corporates that are domiciled in or have substantial exposure to Nigeria, and also placed on review for downgrade the long-term deposit ratings, as well as the long-term issuer and senior unsecured debt ratings, where applicable, of 9 Nigerian banks. Let's get a sense of what these downgrades mean for the Nigerian economy now. We have Yomi Ajayi, banking and finance analyst with STARS. Join us. Great to have you on the program. Hello, Yomi, can you hear me?
Good morning, everyone.
Good morning. So, Yomi, break it down for us. What do these downgrades signify? Hello, Yomi, I don't know if you can hear me.
Sorry, if you're speaking, I think you have to unmute because I can't hear anything.
Can you hear me now? Hello, Yomi, can you hear me now? Okay. Okay, I guess Yomi cannot hear me. I'm going to try and get Yomi back. We're talking about the recent Moodys downgrades, and we'll try to get a sense of what this means, for the Nigerian economy. We're going to get Yomi Ajayi back, banking and finance analyst with STARS. Yomi, can you hear me now? Hello, Yomi, can you hear me? All right, seems Yomi cannot hear me. We'll try and get Yomi back, having some technical issues there. We'll take a quick break now. When we come back, we'll continue the conversation. Do stay with us. Welcome back. Let's try and get Yomi Ajayi now. Hello, Yomi, can you hear me?
Yes, I can hear you. Sorry,
fantastic. So I would say, Yomi, break it down for us. What do these downgrades signal?
Okay, so the downgrades coming from Moodys, they're very negative. What they signal is, and what Moodys also said, was that the companies in themselves are fine. So we have Seplat, Dangote, and IHS holdings that were downgraded, non-financial institutions that were downgraded. And Moodys themselves said that the companies themselves were fine, but then due to their exposures to the Nigerian economy, right, that was the reason for the downgrades. So you look at the specific companies, Seplat, for instance, although they receive their revenues as an upstream oil and gas company, although they receive their revenues in dollars, they still have to repatriate it into Nigeria, which goes through the CBN within 90 days, and then they can take it out to their offshore accounts. And Moodys was citing that there's a risk that money could be trapped in Nigeria and they won't be able to get that money back. So far, that has not happened, but there's just a risk due to the FX shortage that we're seeing. And we've seen foreign airlines complain about not being able to repatriate their funds. So this is also something that could happen to Seplat. For Dangote Cement, they face increased risk or credit risk from their operations in terms of, first of all, they have a lot of short-term debts that they have to refinance very soon. So due to the increased interest rate environment, that could become very expensive for them. About 60% of their debts are short-term debt, and that could easily become a problem for them. Also, in terms of their exports, in terms of the revenues that they get from other countries, right? Because as we know, it's not just Nigeria that is facing this FX crisis, right? We have countries like Ghana also, they're facing these countries. These are countries that Dangote exports to, and they also trade in local currency before they have to convert their dollars to pay to Dangote. So there's also that risk. For IHS has a lot of clients, many of them, the MNOs, which are the big telco companies we know. They are invoiced in Naira, although IHS has some safety measures, right? In terms of their invoices are priced against inflation, and they account for exchange rate devaluation, right? But then the companies, the MNOs themselves, are also at risk of the FX shortage, right? And in terms of even the capex spend that IHS spend on their towers to maintain their towers, there's also that risk. So based off of all of that, and not necessarily as a fault of the company, itself or the companies themselves, right? That was the reason for the downgrade.
Quite interesting. But how bad, are these downgrades?
So, like I said, the first, or which is the most significant problem for them is that these downgrades would affect their ability to raise capital. These companies are hugely capital intensive, right? So they need capital. They're always at the capital market trying to raise money. So this will become increasingly difficult for them because lenders would ask for more returns in terms of interest rates on the debt that they're trying to raise. Secondly, if you look at their performance on the equities markets, the IHS is listed on the New York Stock Exchange, Seplat is dually listed on the NGX and the London Stock Exchange, and then we have Dangote and Nigerian Stock Exchange. Currently, the equities market has been hit by increased interest rates, right? That we've seen the equities market, retract in terms of its performance this year. So that's going to be negative for them because investors who are looking to buy into these companies, these blue chip companies, as you might call them, IHS, but investors looking to invest into these companies do so because they are expecting future cash flows, right? That would trickle down to them either in terms of dividend payments or higher stock prices. So we'll see this negatively affect their stock prices also. So it's a double whammy for these companies.
Yeah, but let's take it now, to the Nigerian economy. What impacts can we expect?
Because we should not forget that it wasn't just the DFIs, it wasn't just the NFIs, the non-financial institutions that were downgraded. We also had 9 Nigerian banks that were also downgraded. We also, a week before, we also had Nigeria's credit rating was also downgraded from B3 to B2, meaning even for the Nigerian economy, even for the Nigerian government, it's going to become increasingly difficult for them to borrow. As we know, they just announced our largest budget ever, which is a 20 trillion budget, which is expected to be, has about 11 trillion deficits, right? And it's going to be funded by borrowings. So it's going to be increasingly difficult for them to visit the international market, if at all they do, to raise debt. So and again, what that means is that you have important spendings or like infrastructure capex, right? Those are the things that are going to suffer because they have to continue with their subsidy scheme and they have to continue with recurrent expenditures like debt servicing and all of that. So what this means for us is less money to spend on development, on growth and development, and that would be negative for us. Also, it means that we're likely going to see less investors coming into the Nigerian market because if a downgrade signals, right, that the basis of the downgrade is because there are no dollars and there's a dollar ceiling in the Nigerian economy. And people don't want to get trapped because if I'm coming in with my money, the point is that I'm able to make returns and repatriate back to my home country. But if I can't do that, there's no point of me bringing my money in. So less capital flows and less growth.
And we know Warren Buffett's mantra there. It says, buy when the market is fearful and sell, when the market is greedy. Do you think there'll be some investors out there that even though, there's fear, lending, down here, do you think there's some that will still take that plunge and say, you know what, I might make some more profit? What are the opportunities there?
Well, as they say, yes, the market is driven by fear and greed. But then, you need to look at the prospect of when the stock prices are going to go back up, the outlook of the equities market. And right now, what it seems is like prices might still go down even further because even monetary authorities around the world are still signaling further rate hikes. Although they might have been priced in currently, but then if there are any other shocks to the supply chain, or maybe energy prices or anything, and inflation continues to go up, there might still be more interest rate hikes. In fact, I think it was last month during the IMF meeting when they said there's a 99.9% chance of a global recession next year. Sorry. So that means that the outlook for the equities markets is not so positive right now. It's very gloom at the moment. So if anybody that is coming in, they'll be very cautious, especially for the domestic investors. They'll be very cautious and stagger their purchases right now. But then for the international guys, the foreign portfolio investors, you might not see them coming in because, like I said before, the main reason why they're coming in is because they should be able to get their dollars out. And if there's no assurance of them being able to get their dollars out, the dividend yields that we're seeing on like a GT, for instance, that's giving about 18% might not be so attractive to them, because what's the point if I make that money and I'm still trapped in your country?
All right, but do you see future downgrades on the horizon?
Oh, yeah, definitely. So Moodys actually placed the 9 Nigerian banks, the 3 non-financial institutions, and even the country's credit rating itself on review for further downgrades. That if there are any more shocks to the economy, right, there'll still be further downgrades. In fact, so S&P, this is also in line with S&P's ratings. So S&P and Moodys have downgraded us. Currently, it's just Fitch that hasn't downgraded us, but I think they should be releasing their ratings in November, and we'll probably see them go in line with the other 2 rating agencies. So yes, there will be further downgrades for us.
All right. Thank you so much. That was Yomi Ajayi, banking and finance analyst at Stairs. Thank you for giving us your perspective.